All right, everyone. Hello. Welcome back to my channel. This is another episode of Monday Market Update. And by the way, happy July 4th. Happy to the birth of our country, to the birth of the USA. I'm grateful for being here. And today I'm going to talk to you, couple information that I get about the real estate market in Phoenix, Arizona. We are not so in a good news right now in regarding to the market, but I just have to breaking the news and then telling you the current situation that we have. Specifically today, we are going to look at the two ratios. Number one, the sale price to list price, right? This is important because we can see that this is a really good indication of how cool, how hot the market is, right? If the market hot, of course, that contract ratio is I'm sorry, this ratio is going to be way higher than 100%, meaning that the actual sale price is higher than the list price, meaning that the buyer is willing to pay for more, right? In the other hand, if it is low, then we're going to have a problem because nobody's going to pay for the ask price anymore, okay? We're going to look at that number. Number two that we're going to look at is the contract ratio. This is basically the comparison between the active listing versus the under contract. If there's so much, this is basically a ratio so that we can see the comparison between supply versus demand. Okay, so let's dive right in. There's not a lot of good information as I told you in the description, but I just gonna break the news and show you where it is. Okay, so first of all, let me turn off a couple of information that is not helpful here. The first chart that you see right now is the sales price to list price ratio. Okay, so again, by the way, all the chart, all the data that I collected is from a company called Cromford Associates. This is a really reliable source of real estate data, and specifically for Phoenix market right here. All right, so as you see here right now at this moment, the reason why we have this information is important is that we just finished June, right? We just finished June about 2 or 3 days ago, 4 days ago. So all the data of June, we can collect that. And as you see here, again, the sale price to list price ratio as of June, this is collected every month, right? As of June, we have about 98.9%, okay? 98.9% June of 2022, right? So that is actually below 100. As I recall to you, the sale price to list price ratio is simply you're gonna collect all the average sale price, the price that the house actually sold for, divide by the list price, the price that the seller asked for it when it is first listed on the market, right? Obviously, if it is less than 100%, meaning that the sale price is less than the list price. Okay, in this case, since February of 2020. I'm sorry, February of 2021, right? From 2020 of 2021, when it is the first time breaking the 99%, right? And it's go up and it's go down a little bit here, as you see, but it's keep going up keep going up at the end of 2021 year. Now the year of 2021, and it's go down now to 98.9%. Okay, so it's below. It's below 100%, meaning that the average sale price is no longer, people are no longer interested in paying for more than what is asked. Okay, even in some situations, it's going to be below what the seller asked for. Now, how do we tell whether it is significant or not? The 98.9%, whether it's significant or not. Okay, so there's a criteria. If it is from 97, let me look at, yeah, this is from 97 to 98. We have a normal market, right? Because not all the time the seller is reasonable to put on the market a reasonable asking price, right? Not all the time. So therefore, there's take into that account 90 to 97, 97 to 98% is called normal, right? We're expecting some reduction in price as they go into the contract and finish close up, okay? If you do have around 100% or more, right? Like in the market that we see so far from 2020, around June of 2020 to the beginning of this year, 2022. It's a hot market. It's super hot market. The buyer is willing. Well, they have nothing to lose, and they just pay more than what they're asking price is. Now, if it is below 98, I'm sorry, below 95, is called a very cold market, right? Okay. So even from the 97 to 95, there's only a 2% change. We move to different. We move from normal to a cool market already. And then as you see here, even though it's not there yet, we can see that it's approaching 95% very quickly and very easy. Could be next month. Okay, so if you come back here for another monthly, by the end of July, we're gonna have another number, because this is need to take into account of a lot of data to give the best data points, right? So if you go back here next month, you're gonna see again the new number for July, and at that time we see whether we're gonna in a cool market or not. Okay, but right now there's a great chance for the market to keep going down like that. Okay, the other chart that I want to show you is the contract ratio. Okay, contract ratio is basically we're gonna calculate based on the under contracts, the number of under contract listings divided by the actual active listing at the moment. Okay, for the month of June, but don't look at the July yet, because we can actually look at the July, because that is the newest number right here for the entire month of June, right? So as of right now, we have about 60.8%. Okay, 60.8%. And as you see, is right here, we are falling right above, between the border of hot market and warm market. Okay, from 30 to 60 is a warm market, a regular market. That is what everyone expect a regular market gonna be. Okay, from 30 to 36 is a warm market. Okay, so it's right there at the border. And as you see, the other thing we can see is that there's a trend for the last 5 months. We're hitting the highest point in March of 2022, 278.6, okay, percent, of course. Then it's keep going down and keep going down. Obviously, because of interest, there's a lot of people, there's a lot of less demand, and plus a lot of people want to sell right now. That even contribute to the situation is getting worse and worse. So it's gonna keep going down. As you see here, next month we're gonna see another number, and then at the end of next month we're gonna look at that right away. We're gonna see at this pace, we're gonna see whether it's go down or not. But we can obviously argue that it's gonna continuing this trend. This is a prediction, okay, based on the data that we have so far. It's gonna keep going down like that because of the trend that we have right now. So if it is going to the cool market, it's really bad, because at that time no one going to buy a house anymore. There's a lot of houses onto the market, and so at that time the price has to change. The price has to change, has to be adjusted, so that it's encourage more demand, right? Because that is, at the end of the day, the demand is really depend on the list price. Okay, the price. So if the price is interested enough, the buyer are still buying. Okay, I know that people worry about the high interest rate, but the high interest rate is easy to be fixed, because it could be refinanced later on if the interest rate go down. Right, we can refinance the loan easily if the interest rate go down, or you can even buy interest rate points. Right, I have a client that going that route. They pay about, if I remember correctly, they pay about $5,000-$6,000 to reduce from 6.125% to back to 5%. Right, so low interest rate, you can work on that, but the sale price, the purchase price, when you purchase it, it's already done, right? When you close the deal, it's already done. So it really depends on the market to see whether that number goes up or goes down. In this situation, though, we're going to continue to see that for now, for what we see so now, the prediction is that next month is going to be even less. And for that reason, if it is going to the cool market, the price has to be adjusted again. Okay, so for that reason, I think I've been communicating to a regular buyer. I just want to emphasize because there's a couple of people talk to me like, why Long? Why do you say people not to buy or not to sell? Not everyone gonna be the same. Okay, I'm just saying like in the situation, if you have no rush, if you have no must, if you have no need for a new house or to get rid of the current house, do not buy or sell because we need one more data, one more month to see whether it's changed or not. Now, if you have the feeling that the market is going to go down and the price is going to go change, and then you want to protect your investment, okay, you protect your investment, definitely sell it because I cannot be the person who can make the decision for you. That is the decision that you have to make. I'm saying is that if you are not in a situation that you don't have to rush to buy, you don't have to rush to sell, you don't must sell, you don't must buy, then don't do it. Okay, if you do in a situation though, you have to look at the strategy to list, the strategies to buy very quickly, very effectively. Now, for the investors, though, I just have to say that this is actually the best time for investor to negotiate and buy. Okay, this is we as an investor, we always think about like, okay, we're gonna buy. The best time to buy is when the market goes down, and the best time to sell is the markets go up. Right? We already passed that. We already passed the market keep going up. We are now in the very nice, very thin line, very border up between the two markets, and even we are at the between the switch between the two markets right now. You still have the investor buyer. You still have a lot of negotiation power in hands right now. Okay, there's a lot of contract that I put for the last 2 or 3 weeks. I can negotiate like $25,000 down, 2% seller concession on the value of the home, and things like that. $10,000 more for my buyers. So at this situation, the seller who really need the house to be gone, they are more than willing to negotiate with you. So investors, this is if you want a better rate of return on your investment, this is the time. I'm gonna say this is the best time for you to get into that, so that but you can negotiate and you have more room to play with your money as well, and to see whether the investment makes sense or not. And like I say, don't be afraid of the interest rate high. That is a part of the mortgage, right? That is a part of the expense. And if you account for those expenses, remember also those are the tax deductible item, right? The interest amount is the tax deductible item, and at the end of the day, you can offset with the rental as well. So it's not always the worst situation if the interest rate is high. If you have the capital right now, I don't think that you want to go to stock. I don't think that you want to go to crypto. So where are you going to go? If you're an active investor, right? If you are passive, then I would say wait, right? You don't want to make an action right now. If you are more than like risk, the risk tolerance is higher, this is the best time for you to negotiate and win the deal in the better price in your favor. Okay, so more to come on that information. If you do have any question about the information that I give to you today, feel free to give me a call. My number is right there, 602-515-2442. Thank you so much, everyone, and happy 4th of July. Bye-bye.